the right places in the country.
There will be significant implications for emerging markets investors, including Africa, driven by expectations of a softer US dollar, resilient global equity markets, and improving prospects for emerging market assets. This is according to Standard Chartered's Global Market Outlook for the second half of 2025, released earlier today. The report is projecting a constructive but volatile environment for investors worldwide. It highlights that global macro conditions remain mixed, with the US dollar expected to weaken in the next 6 to 12 months.
We expect a weak US dollar. When you go back through history, the past 20, 30, 40 years, you get to see that periods of dollar weakness tend to be really good for markets in two ways. Number one is that they tend to be really good for stock markets worldwide. And the second is that actually a weak dollar is a really good indicator of the outperformance of non-US markets, whether in stocks, bonds, or anywhere else. And I think as an investor, that's quite important because we're coming off obviously a long period of actually US markets, leading the chart. So we expect US equities to do well as well. But then you say that incremental dollar, perhaps there's more opportunity now outside of the US, and particularly for emerging markets.
Looking directionally from where the dollar is going, we see the from a local currency perspective being a little bit more range bound. We don't see much impact. If you look at the reserves at the moment, it's 4.9%, 4.9 month of import cover, which gives a central bank really enough room to really support the currency if need